The qualified business income, or QBI deduction, is a deduction up to 20% of qualified business income, or QBI, from a trade or business, including income from pass-through entities. This includes QBI derived from Form 1040, Schedule C. Let's take a look at how QBI is calculated for trades and businesses reported on Schedule C in Drake Tax. Since Schedule C income includes income only from a trade or business, Drake Tax will calculate the QBI deduction automatically for any activity reported on Schedule C. There is, however, a section of the Schedule C data entry screen reserved for entries relating to the QBI deduction. If the business is a specified service trade or business, or SSTB, check this box. This will calculate any limitation of the QBI deduction if the taxpayer's income is above certain thresholds. If the taxpayer elects to aggregate businesses for QBI, enter the business aggregation number, or BAN. Enter the same number for each business to be in the aggregation. If more than one aggregation group is needed, use a different BAN to group those activities. For more information about the BAN, please refer to the field Help by right-clicking in the field, selecting Help for this field. Override fields are provided for W-2 wages paid, the unadjusted basis of qualified property immediately after acquisition, or UBIA, and the QBI itself. Otherwise, these items will be calculated based on the information entered on this screen and associated asset screens. We recommend reviewing the field Help for the override fields before entering any amounts here. In this example, no entries are needed in this section. Reviewing the Schedule C in view mode, we can see the net profit for this business is $51,850. Since this is self-employment income, we can also see there is an adjustment for SE tax on line 27 of Schedule 1. And for QBI purposes, this adjustment must also be subtracted from the net profit before arriving at the amount used to calculate the QBI deduction. This adjustment is shown on the QBI explanation worksheet. Line 1 is $51,850, and 1/2 of the self-employment tax is subtracted on line 7, arriving at the QBI for this activity of $48,187. Since the taxable income for these joint filers is less than $315,000, the QBI deduction simplified worksheet can be used. It is listed in the tree view as QBI Simple WKS. We see the Schedule C QBI amount calculated on the QBI explanation worksheet of $48,187 listed on line 1. Since there is only one source of QBI for this return, the total QBI on line 2 is $48,187. Line 5 shows 20% of the total QBI, which in this case is $9,637. However, limitations must also be considered. The QBI deduction is limited to 20% of taxable income before QBI less any capital gains. Line 11 displays the taxable income before the QBI deduction, which is $36,199. The AGI minus the standard deduction. Since this return has no capital gains, the income limitation computed is 20% of taxable income before the QBI deduction, or $7,240, which is less than the amount computed on line 5 above. Therefore, the QBI deduction for these taxpayers is limited to $7,240. This amount flows to 1040 line 9 and is subtracted along with the standard deduction or itemized deductions from AGI to arrive at taxable income. For more videos relating to QBI and Drake Tax, go to drakesoftware.com/videos and select the Tax Reform category.